Thank you very much. We're developing the only major uranium mine in the world today, but everybody's interested in battery metals. In fact, my friend Russ Clark from Casbah has told me tin is now a battery metal. I'm not sure how you get all the periodic table into a battery, but we suspect it may not be the case. We think the real story is, what are we going to charge these batteries with? We need zero carbon electricity, and that's nuclear and renewables. In fact, if you think about it, this is the biggest energy transformation the world has seen. We're going from an internal combustion engine to electricity. And have a think about what that's going to have, effect that's going to have on our electricity generating systems. If you take the UK, just the UK alone, needs another 30 gigawatts to meet the 2040 targets, and that's equivalent to another 10 Hinkley points. We're developing a mine that will be a top 10 producer. The reason why we're able to consider going ahead today is we have a very rare combination of low capital costs and low operating costs. The low capital costs in Western Spain are due in part, and thanks to the British and German taxpayers for funding the European Union developments. We have power lines, roads, railways, ports, acid smelters. You combine that with a remarkable set of ore bodies that have phenomenal grade, phenomenal strip ratio, very, very good metallurgy. So that's why it works. What's really interesting, and just picking up on Julian's comments about the change in detection limits and some of these exploration techniques you're using today, our Zona 7 ore body is worth about $500 million US. It occurs 4 meters below the surface. Our geos were driving over it for 10 years because there was no radiometric anomaly. So what we're using now is a technique called ionic leach, which creates a fingerprint. We're looking for more. We found another fingerprint in an area on the similar stratigraphy, similar structure that we will be drilling. So watch out, not just in our company, but in other companies, for these new ultra-low detection techniques that add ability to generate targets before you drill. We're in an industry where the uranium price is at 12-year lows, and every single year somebody stands up here and says, this year or next year is the year when uranium is going to turn. The thing I look at is the reactors. The EU and US reactors, they're full of uranium at the moment. But over the next 5 years, they go uncovered. And that's what happened in 2006. In 2006, before the uranium price ran, it's when the utilities came off coverage and had to recontract. They left it a little bit too late. They went to the spot market. The uranium price ran. And we're getting a sense of that because we are now contracting at twice the spot price for the next 5 years with these guys. The real story, though, is perhaps with the 2 major uranium producers. Cameco, the biggest listed uranium producer, and Kazatomprom, the biggest producer, have both announced substantial cuts. In fact, if you add them all up, all the mines that have been closed, all the mines that are going to be closed, and the Cameco and Kazatomprom cuts, this is 25% of mine supply. But perhaps what's more interesting than that is that these are the best mines in the world being closed. McArthur River is the world's best uranium mine that makes money today at even $20 or $21 a pound. So Cameco's closing that mine, shutting it in. And I think perhaps what Cameco's saying, it may be what Glencore was saying 2 years ago in the zinc market. Glencore said, we don't want to sell our zinc at $1,500 a pound, so we'll shut in these mines, we'll turn them off. And what's happened to the uranium price? Sorry, the zinc price? It's now up and it's still climbing. It's nearly 100% up 18 months later. So what we're looking at is potential supply-side discipline from the tier 1 producers, which could transform the uranium market. We're very confident about what Cameco is doing. I think the key will be Kazatomprom, and perhaps a clue to what they're doing is that later this year, they're talking about a JP Morgan-led IPO. So let's see between now and then what they do in the spot market. We benefit directly from the uranium price. The biggest uranium ETF in the world is listed in New York. It's got a value of around $400 million US. We are the 6th biggest holding in that fund. When the uranium price goes up, they buy our stock, and when we're thinly traded, our stock goes up with it. 2.5 years ago, we reinvigorated the Berkley story. We created extra liquidity. We added a register full of blue chip institutions. And despite the fact, and the analysts were exactly correct, the uranium price was going to fall. The uranium price has fallen 43% to 12-year lows. We've managed to treble or quadruple the share price and increase the enterprise value by 6 times. I'd like to join you, I'd like you to join us and see what we can do when the uranium price goes up by 40%. Thank you for your time.